Hi, are you ready to transform how you analyze financial statements? Going beyond the numbers to truly understand a business health and performance. Whether you're a student of the Institute of Chartered Accountants of Nigeria, ICAN, or other professional accounting bodies, or you're a finance professional looking to elevate your game in the real world, this video is tailored just for you. Today, or in this session, we are diving into the initial analysis of financial statements, a crucial skill for both exams and real-world scenarios. By the end of this video, you will not only master the rapid review process, but also learn how to uncover the hidden stories behind the financial headlines. This is your chance to take the first step in making strategic business decisions with confidence. Don't just watch, engage. The insights here are as valuable in the exam hall as they are in the boardroom. Let's get started. Let me share my screen as I go mini-me as usual, and let's take a deep dive into the initial analysis of financial statements. The initial analysis of financial statements should establish the financial headlines of the business by way of a rapid review. So in your initial analysis, to decipher the stories in brief, you should capture the financial headlines and what the financial information are all about. The aim of the rapid review is to gain an understanding and assessment of the business as a whole. It is a skimming process, but this should not ignore obvious and important features. And under exam conditions, you take your pen and take or underline notes, take notes of key issues, key items, key sentences, phrases in the financial statements. This is very important. In that same rapid review, you should be looking to access the business by reference to the following criteria. What is the nature of the business? That's number one. So under the nature of the business, you're looking at the sector. Is it banking, healthcare, FMCG, pharmaceuticals, name it. Is it retailing? Is it manufacturing or another industry? So what is the nature of the business? Another area of the nature of business you should look at is it an expanding or contracting business sector? Expansion in the sense, are they breaking new horizons, breaking new grounds, or is it a contracting business where a firm is consulted or contracted to provide the expansion strategy or program? This is very important. Also, under the nature of the business, are there recent events, factors that affect this sector, changes in Forex? For example, where I work is highly impacted by Forex because the equipment maintenance to some extent are dollar denominated. So recent events has seen to the higher valuation or devaluation of the Naira. So these are events that affect the nature of business. So you ask yourself, are there recent events, Forex issues? Does the company depend on import or export services? Very, very crucial in your initial analysis. What is the impact of technology on this business? Is the business technology driven or manually driven? Very, very important. Currently where I work, technology is the heartbeat. Without technology, you can't even register clients on our system. So these are the initial analysis you perform on the nature of the business. Does electronic commerce affect this business? Is buying and selling done on the web, electronically, on the internet? This is very critical. Number two, where is the business in its life cycle? So is the business starting? Is it a startup? Is it growing? shrinking or static, the total business growth, or certain sectors are growing, certain sectors are not growing. So these are questions you ask initially. Also, under the life cycle of the business, number 2, is it growing organically or by acquisition? Organically in the sense that the ordinary course of business, is it growing in that area or by acquisition? Looking at its parent or subsidiary or target or whoever is the holding company. So these are areas you should initially analyze. Is the company making good profits, marginal profits or losses? How much? How significant? How material? When did they make such losses? Which financial period? Most of the times you are given maybe a 3-year financial statement summary, 5-year financial statement summary. When did they dip? When did they go down? When did they go up? So these are questions you ask initially. Is the company stable, or is their performance erratic? Are there spots of growth, or have they plateaued or stayed at a particular level? Vital questions. Number 3, what is the size of the business? Is it a small business or a small company? Is it medium size or is it a large corporation? Using what criteria to size the business? Revenue, profit, total assets, net assets. Very, very key in your initial analysis. Is it a single company or a group? A holding company, national or multinational? Very critical. So looking at the size of the business, you ask these questions. Still on the size of the business, is it a quoted company, a publicly listed company, or unquoted, a limited by shares company? What are the volume of shares issued? Is the business stable? Is the business financially well structured? Appropriate mix of debt, long-term, short-term, and equity. Do they leverage debt and equity? Is there a balance in the mix? Very important question in the size. And finally, in the same size of the business, is it solvent? Able to meet its current liabilities? So solvency issues should be looked at initially from a snapshot of the SFP, especially the current assets and the current liability section. With a good life expectancy, is it starting up, expanding financially, or declining? Same question under the size of the business. Are there budgets and forecasts achievable or realistic, in line with the strategic direction of the board or senior management? Key questions to ask. The next one is, what is the wider context? The economy. How does the economy impact the company, positively or negatively? Is there recession in the economy, or recovery? Looking at the company also, the wider context. Is it home-based or involved in imports or exports, where Forex will definitely impact it positively or negatively? Also the wider context in terms of inflation or stagnation in its markets. Availability of finance, any banking constraints, loans, overdrafts, quantitative easing, interest rates when it comes to borrowing. These are wider contexts you should look at. The fiscal policy of the economy, stimulation or investment or restrictions, any tariffs or quotas that impedes the growth or hampers a company's strategy and expansion program. Having rapidly conducted the initial analysis, you should have gained a comprehensive overview of the business. So from these questions, vital questions you've asked, you should be able to position yourself to start and consider the company's financial weakness and the strengths, having asked these very pertinent questions. However, it's important to make sure that from the beginning, you integrate your analysis, and therefore you should always be aware of the wider context in which you are conducting your review. This is very important. So make sure that your analysis comes with the wider context. Don't analyze inside or in isolation. Make sure the wider context are brought into consideration to make sure you capture the internal and the external environment of the business. This is very crucial. So for example, from the initial analysis, a business may appear to be growing, and therefore looking from the grasp of the financial statement that they are possibly succeeding. But if the whole economy in a period of strong growth and this business is growing less rapidly than others, then it's probably not succeeding. Even though you could see maybe revenue growth, profits, and some other parameters reading positively well. But when you look at the general economy, it should give you the reasons to investigate more on what the results of the financials are speaking to. Try to avoid making generalized or final judgments from rapid first impressions. So first impression matters, but they don't give you the reason to make initial decisions. So try to avoid making generalized decisions from your first rapid impression. The fact that the economy is currently in recession or experiencing a weak recovery is not necessarily the reason for poor results being achieved by the company. Also not the reason for good results, you may say, in your analysis. There may be a more pertinent and potentially more worrying and alarming reason which you must be able to identify as part of your detailed analysis. So after your initial analysis, you must go into detailed analysis to be able to seek wider, dive deeper into the reasons and why the situation you found in the company, positive or negative, is what it is. Thank you very much. And this is very important for you to be able to understand that the initial analysis is not the end, but a means to the end. And there you have it. With these tools, like the initial analysis, you are now equipped to conduct this above the surface. The initial analysis also enables you to access any business with clarity and with confidence. Remember, whether you're preparing for your next ICAN exams or other top-notch professional exams, or you're navigating complex scenarios in your workplace, mastering these fundamentals will set you apart. Thank you for watching and engaging. Don't forget to like, share, and comment in the comment section. I'd like to hear your thoughts on this video. Let us know your biggest takeaway and any questions you have. I'll respond to them unfailingly. I'm here to help you ace your exams and thrive in your career. Remember, it's not just about passing exams. It's about building a career and making informed decisions that impact businesses positively. Until next time, stay sharp, stay curious, and keep making strides. See you in the next video. And until then, bye for now.